Hello. Welcome to my channel, my dear friends. My name is Avilash and I'm a trader next door. In this video, I'll be analyzing the chart of gold USD. So if you're watching my videos for the first time, you can subscribe to my channel for regular market analysis. So let's get started. So my dear friends, this is US dollar currency index DXY is right now standing at 102.03. So DXY is still trading inside the range here. There was some movement after the retail sales report, but we can see that right now the XOR is kind of silent. There is not much crazy movement and still trading inside the range. The range is 103.50 on the at the top as resistance and 101.25 at the bottom as support for the market. And there's a news that US dollar slumps as data continues to show slowdown. Yen rises. So US housing starts fall in December. Philippine manufacturing index better than expected in January. US jobless claims drop in latest week. So overall, US dollar slumps. That's it. And here is our beloved gold, and gold is standing at 1931. Gold is extremely bullish. My dear friends, around 2 days ago, 2 or 3 days ago, I showed you this report, the COT data, commitment of traders, and I showed you that non-commercial have taken, the institutions have taken 72% long position on gold. So as a result, there's a high chance that market will be bullish for the next couple of days and weeks, because after all, institutions drive the market and 72% institutions are long. It means they have taken buy position on the chart of gold. So as I mentioned earlier, that it is better to take buy position only. Buy at retracement is still the best strategy in this chart of gold right now. Right now, gold is standing at 1931. So if you already have taken a buy position, considering it as a breakout, then you can be on the trade. No need to exit from the market. But if you're looking for fresh position, then I'll say that you can wait for some time, because after this breakout, okay, the red line here is the breakout line. After the breakout, you can see that there is a retracement. There's a retracement on the chart, and it looks like the market, okay, market is trying to take support at the previous high. So previous high, the resistance is becoming support. Resistance is becoming support here, the red line here. So as a result, there's a good chance that market will be bouncing. If you see that market takes support and market bounces, you can go for a buy position. Or especially during the Asian session, listen to me carefully now. Okay, especially during the Asian session, observe the volatility of the market. If you see that market is going down, market is trading around 1928.27. Below this line here, observe the volatility. If the volatility is low, or if the size of the candles like this, it means that there is not much volatility. Selling pressure is not very high. Retracement pressure is not very high. And you can consider taking a buy position at 1925. Why 1925? Because 1925 was the previous high, which is also acting as the support right now. 1925 is not a very strong support, but in this market condition, when we are waiting for retracement, 1925 has the potential to provide support to the market. In addition to that, if we draw Fibonacci here, we can see the 1925 also has the Fibonacci 23.6% retracement level. You got my point? Okay. Secondly, in case market breaks 1925, you need to observe market around 1920 to 1980. This is your second support. See, I am giving you multiple supports in the market. So it all depends on the observation and volatility of the market. If the volatility of the market is low, then you can expect the market to bounce from 1925. In case the volatility is high, then obviously 1925 does not have the strength to provide support to the market. Then we will have to focus on 1920 to 1918. More or less, this level is good. This level is good. Okay, if market takes support, if you see market taking support, market showing price rejection from below, market forming a hammer kind of a pattern, you will get a confirmation that yes, 1920 is acting as support, and you can take a buy position. And below 1920 we have 1916 as well. 1916 is also not a very bad level. Okay, it is also Fibonacci 50% retracement level. So these two levels, 1920, 18 and 1916 is are actually not is are good support on the chart of gold for retracement purpose. If market comes down for retracement, 1925 is a weak retracement level, but if the volatility is low, you can consider taking a buy position. Apart from that, apart from these minor support level on the chart of gold, we also have good support or strong support around 1909 level. Okay, 1909 level. See, these are all support zones. 1909 and another supporter 1901 to 1900 level. This is also a very good support, because see, sometimes we suddenly see a big drop in the market, because if you look at the overall chart of gold, if you look at the overall chart of gold, then clearly we can see that market is in uptrend. And as we all know, trend is very important. Trend is our friend. And market is also standing at the top of the market. Okay, means highest point. Okay, so the thing is that if you want to follow the trend, so you need to take buy at retracement. Okay, but we also have a pending retracement, because market is right now standing at the highest point here. So, and we also have a clear divergence, so there's a possibility that market may come down for retracement. If the retracement is big enough, if market comes down for retracement forming big red candles, then observe the market around 1909, 1901 level. These two are levels for big retracement. And if market comes down for small retracements, observe the market 1925, 1920, 1916 level. These are small retracement levels. Okay, and if I take you to the daily chart of gold, then you can see that there is no resistance. Okay, so right now we don't have any resistance on the chart of gold. The next big resistance is around 2000 level, and right now gold is standing at 1913. So my dear swing traders, okay, it's time to pull up your socks, because there's a long journey. This is the next resistance on the chart of gold, 2000 level. So I don't know what is going to happen to the sellers. So if you already holding a sell position, my dear friends, please be careful, because it's time to protect your capital, because there is no sign of trend reversal yet. Because yeah, for a trend reversal we need a news, and we don't have that yet. So please do not gamble with your hard-earned money. Follow proper risk management. This is my analysis. I can be wrong as well. Okay, I can be wrong as well. So bye bye, take care.